Hi, welcome to the market alert for Wednesday the 11th of March 2015. And starting off in the pre-market session, you can see the market struggling at 17,950, and then prices trading all the way down to 17,806, so 150 point drop even before the market actually opened. And the reason for this is that the rumour mill is alive and kicking with regards to the Federal Reserve proposing to increase interest rates, which will be staggering if they actually do, but that's why the market moved lower yesterday. And if they do go ahead, then it's going to cause a lot of carnage to the downside in this massive Ponzi scheme, which of course has been supported by QE and still is since March of 2009. Of course, it all kicked off at the end of 2008 when we had the so-called credit crunch. So the market losing 150 points before the start. So the market, when it opened for the afternoon session, managing to rally a bit. You can see the market struggling there at 17,850. We then get the sell signal. We see the markets actually fill this. It came back, nearly took out the stop, and then closed back below the psychological level there of 17,800, and then traded all the way down to 17,750. Again, great targets, as you've seen on many occasions now in the market alert, to use the psychological levels as potential profit targets as well. So this one would have actually produced, had you let it run down to the psychological level, around 32 points. The market finds support here, and look where it trades back to. It goes all the way back up to the 17,800. You've also got this resistance to the left as well, which happens to be where the stop was. You can see the selling and then the buying bar there, forming that resistance level there. So prices hit the brick wall, this resistance level there, and you can see that we've got the upthrust, and then market closing back below the 17,800 level and heading all the way back down to the 17,750, where the market goes through but then finds support and then develops this channel. And you can see here that the market is now struggling with the 17,750 level each time it goes through, where we see it go through here, here, and here. You can see how the market's forced back. And we had a buy signal later on in the session. This was at 6 p.m. You can see the market trading up to there. Well, you know it's got to take all of this out on the left in order to move higher with new professional buying. That didn't materialize, and we see this trade stopped out at 17 point potential loss there. But look where the market traded down to, straight back down to the 17,700, and then starts to come back but fails to, and then eventually closes below this. And there you see the market coming back to this level now, just finding support on the overnight market. So again, being pulled like a magnet to the 17,700 level there. So a lot of pressure to the downside at the moment based upon these rumours. And again, you can see this in the daily chart. The majority of this move taking place in the first 3 hours prior to the session opening in New York. That's the day session. So the overnight market was really where the big move happened yesterday, and not so much in the afternoon session there. See the market finding a bit of support there at the moment, and again, no surprise if you look across to the left, you can see we've got a bit of support here before the last up move took place there. So we can remove these fibs at the moment. We'll see what the market does before drawing some more in, and that way we can measure the momentum back to the upside. So have a look, see if there's any news to move the market today. At 3 p.m, what have we got? The nicer GDP estimate, but that's for the GP. Wheel speaks, but again for the UK, that's the Monetary Policy Committee member. And then we've got the bond auction, but that's at 5. So nothing really, there's nothing to really move the market from 230 onwards. No, crude oil inventories there as well. So again, not any major news there to move the market. In the implied volatility, let's have a quick look at this. We've got up from 12.77 to 14.18. No surprise really, because now the risk is to the downside, and you can see this increase here as well. You can see also that the implied volatility is now above the blue line as well, so it gives scope for this market to continue with the downside pressure as well. So therefore the short side possibly being the better side of the trades at the moment in the short term there. Right, well that's it from me for today. I will speak to you in tomorrow's market alert. As ever, have a great day. Also, thank you for your support, and as ever, thanks for watching. See you in the next one.